Well, guys, what a week to start doing this everyday live. I suppose it's very fitting. I was reflecting back that I started my YouTube channel at the end of Q1, right before the big tariff crash. I started my Patreon the last week of September, right before the October pullback, and now I wanted to do something new this week with recording a video every day. And of course, we see another market correction. So I'm not going to do anything new. I'm just going to stick to the plan as usual for the foreseeable future so I don't turn into some kind of Kramer-Oman. But let's talk about markets, and I'll just go over some market thoughts briefly before we get into the charts to talk through the trades I took today. And I lost my notebook, so I was taking little notes throughout the day on the stocks I was looking at, the actions I was taking, so I can reference those. But broadly, the market is feeling a bit of uncertainty right now. There's a lack of liquidity, the US government shutdown, all those things. But when we see selling like we saw today, and it feels like everything was trending lower, every bounce was being sold, and every rally attempt really was getting faded. I like to pull up a chart that I'll show in a second. Actually, let me pull it up now. No, I can't do it live. Okay, I'll pull it up in a minute of the different sectors, XLF, XLV, QQQ, semiconductors. And if you're in the Patreon group, I post about this a lot. But that showed us today that it wasn't all sectors that were selling off. It was profit taking and de-risking, but healthcare and financials were actually outperforming on the day. So that's one encouraging sign. And even though it was a tough day in markets, I just want us to remember that the Magnificent Seven's CapEx is now projected to exceed $500 billion per year. We have started the rate cutting cycle. We have deregulation. We have earnings growth. We've had a positive earnings season. Earnings growth is running about 10% year on year. We're in the midst of the AI revolution, which we can discuss if that's a bubble or not. But right now, the rally is earnings led. And I would say we're getting into trouble once we get into the software phase of the AI revolution. If we start seeing all these AI software companies spring up with ridiculous valuations that aren't really met by their revenue growth, that's when we might be hitting the bubble phase. But right now, I don't think we're to peak hype on the AI side. And then we have the potential start of QE. So we have lots of tailwinds to think about, and the market structurally has not shifted. And I think getting this US government shutdown behind us could be a big help. And a lot of the selling started today when the US government shutdown was projected to now last as long as 60 days. And the US Department of Labor said that no key economic data will be released until the ongoing shutdown ends. So that means no monthly job reports, unemployment rates, CPI inflation, PPI inflation, retail sales, housing starts. None of that information is coming out. So the markets, they like certainty. They like their data. We can argue over how reliable some of that data is, but they're not getting any of that right now. And then add into the mix, we did have an election day today in the US. So I haven't looked back historically, but I imagine that introduces an element of uncertainty into the mix as well. So let's get into the charts, and I'll talk through the actions I took today and how I'm thinking about the different names we've been discussing. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, so let's start here on that chart I mentioned at the intro, and I've just got 4 indices pulled up. You could pull up more if you want, but I have XLV in orange for healthcare, XLF for financials, QQQ for the NASDAQ, and then semiconductors, since that's such a large part of our current rally. And the point of comparing all these is to determine if we're seeing sector rotation or if we are seeing a broad-based market sell-off. So if we go here to October 10th on Friday, you can see all sectors were selling off in unison there on October 10th. But today, we saw semiconductors and the NASDAQ selling off, where healthcare was still climbing. Financials were green on the day as well. Saw a little bit of weakness in the latter half, but broadly, those two sectors outperformed and had green days overall. So this is a great one just to keep up on your charts to determine if the market is truly panicking and selling or if things are just rotating. Okay, before we get into the main charts, let's just look at the indices. And yesterday we were saying that the selling was not yet too bad. That accelerated after a little bounce today. And we broke back below our all-time high breakout here at 6,800 on the S&P 500. But we did find support here at 6,750, which was our previous support zone and was resistance when we dropped down earlier in October. If we go over to the NASDAQ, while it was holding up stronger, also saw that selling today. Actually, the NASDAQ saw greater selling. We closed our gap, so nothing to worry about there anymore on the NASDAQ. And we bounced from the exact same support zone and have actually recovered just a little bit stronger than the S&P 500 above these previous all-time highs from early October, just to toggle back and forth if you weren't looking at that. But that is that corresponding range here from early October where we're still underneath it for the S&P 500, but the NASDAQ has recovered. So this bounce overnight is a decent sign to me that maybe we have found a little bit of a local bottom and we can start to find our footing. All right, now I'm going to start with the things that are very liquidity sensitive. We'll look at gold briefly and then talk about Bitcoin because that has definitely seen the brunt of the selling, and I think that's what most people are probably concerned about. But if you look at to gold, we saw selling persist. We're getting that same bounce today as the Nasdaq, but really, for all intents and purposes, we're just finding a base in this consolidation right now to figure out what the next move is for gold. But let's look over to Bitcoin. All right, if we look to Bitcoin, Bitcoin did drop its 50 weekly moving average, this green line, which a lot of people pay attention to because it has played support for us during this entire bull run. Really, since we broke above it back here in March of 2023, we have remained above that. We've tested it and wicked below a couple of times, wicked below it here in April. And today we broke below it, and some folks were saying, oh, the bull market's over if the 50 weekly breaks. I would suggest that it isn't over yet. I would consider this diagonal trend line more important. So if we're ranking things in terms of order of importance of what we pay attention to in TA, I would say horizontal levels are the most important. Then diagonal trend lines are the second most important. And then dynamic moving averages, which the 50 weekly, the 200 DMA, even these clouds, those are dynamic moving averages, meaning that with each new candle that closes, they shift in position. So we're really only paying attention to them for that price point locally during that one candle. Whereas diagonal trend lines, we're paying attention to over longer periods of time, over several weeks or months, however long a local trend lasts. And then horizontal price levels, we can pay attention to those years into the future. But if we're looking at where we bounced, we did not break this swing low from June yet. So that's a good sign for Bitcoin. I still anticipate that we're going to test this trend line. The bounce that we're seeing right now back up to 102,000 is encouraging. But since we're so close, it just feels like the market is going to have one more flush to get leveraged longs out. So I'm still playing it cautious on crypto, and our daily structure has definitely broken down. I'm not taking on extra risk. I'm not looking at proxies right now. I'm definitely being cautious, but I'm still optimistic. And depending on when we test this trend line, that would be the line in the sand for me. So if we test this trend line and we have a strong bounce, and for bulls to remain in control, it would have to be a strong, meaningful V-shaped recovery to really provide confidence. That would be a good sign. Now, if we break down from that, then it would be time to hedge a little bit, either go short via a perp trade or put some puts on IBIT for your Bitcoin position. There are many ways you can consider hedging, or if you just want to lock in profits and sell, if you're not in pure form Bitcoin, but you're in something like IBIT, that's another consideration. But right now, until this diagonal trend line breaks, I'm still feeling optimistic. One other thing I just wanted to cover is looking at time a little bit. If we do see a bottom, how long do we think that would take? And just looking at the past corrections, if we go from the high to the low here, we had 143 bars from the high to the low in this correction in 2024. Now, You may have heard me talk about this before, but as we get further on in a bull run, you can assume that corrections are going to get bought up a little faster and a little faster. So we had 140 some odd days, 143. Here we have about 78 bars, so roughly half the time. So for the next correction, we could anticipate maybe 35 to 40 bars, somewhere in that neighborhood from top to bottom, assuming we are still going to recover. So we can just measure that out from the top to where we are currently. Right now we're at 29 bars. So if we go out to 35, oh, this is touchy. 35 would have us on Monday, the 10th of November, next Monday. And if we go out to 40, that would put us at Saturday, the 15th of November. So I would say if this is going to recover and we are going to hold this trend line, looking out for a bounce next week, that's our target. And anything beyond that puts us in a bit of trouble. So we're going to know really soon, is the bull market continuing in a similar fashion, or do we need to anticipate more grind and more correction? Okay, if we look to MicroStrategy, which has been a bit of a leading indicator for Bitcoin, but we are literally on our last line of support here for MicroStrategy. This is the uptrend that we have been in since January of 2024. So for almost 2 years now. And this is what we've been talking about, for weeks. And we are finally testing it. We bounced exactly off of that at $242. So this is a good sign in terms of where the price action bounced. And you can't make this up. Look how exact that bounce was. That a trend from 2 years ago is still holding strong, and that buying steps in exactly at that point is quite remarkable. I'm always impressed by the order in markets despite all these random inputs and players, but that's a different story. Now, if MicroStrategy fails, and I barely have any MicroStrategy anymore, I sold a ton of it at the beginning of this year to shift into more of a trading bag, and then I've already been unloading, and I sold some couple weeks ago up in this range as we were starting to break down. But if MicroStrategy can bounce here, I would say that's the last area of hope for a continuation in the current bull market, at least for this asset. And if it breaks down, I would encourage you to hedge your position or consider locking in some profits. But if we're looking to an analog and we go out to 2017, MicroStrategy did something somewhat similar in 2017. Oh, I forgot I had a trend line there, where we had our peak much earlier in the cycle and then came down and continued to bounce and climb off of this trend line before eventually breaking down to get into the bear market. So if we're taking this as an analog, you could argue that we're somewhere in this neighborhood around June of 21 in terms of where we're coming in to test this right now. So if this continues to bounce, we would have to assume that maybe it will continue to ride this trend line until eventually failing. Of course, history isn't going to repeat exactly, but that's what we would be hoping for. But I wouldn't necessarily at this stage, given the weakness in MicroStrategy, hope for all-time highs beyond what we were able to do in November of 24. Okay, Solana continued to break down. I was glad I did that swap from Solana to Bitcoin just to be in something more stable. But it did find support at the key level that we needed to find support at now. Of course, I would have loved to see $156 hold at this previous swing low. But the most traded zone, if we bring in more action from the VRVP, and a very key level right here at 145. Actually, it's more of a zone of 141 to 145. We bounced right off of that zone. So amidst a terrible day of selling, that was the one sign of hope. But Solana has already broken down, as we covered, from its major trend line. So it has a lot more proving to do. 7-month, uptrend broken is not necessarily a sign of strength, but this also doesn't mean we're entering the bear market. We've had plenty of uptrends along the way that have broken, and the overall trend has continued. So there is a world in which even if it drops lower, it can find its footing and continue to climb up. But I imagine this is going to need a bit more time. And given this breakdown, I would give it at least 2 months before we can see some more meaningful movement on this asset again, assuming we're not entering a bear market. Okay, I promise we're going to get into the actions I actually took today. But one thing I do want to mention, just, we've seen equities, gold selling off, Bitcoin selling off, and the narrative is fading a little bit. Palantir had remarkable earnings on Monday, and the stock sold off. And today, AMD did something similar. And just looking at Palantir really quickly, one thing that is worth noting, this breakout into all-time highs, we are now closing below this. So there is a definite sign of weakness, and I would say this is just related to profit taking, despite great earnings results. But AMD as well had fantastic earnings today and sold off on those earnings, which when good news becomes bad news, something is shifting in markets. And we just need to see, is this something structural that's changing and leading to a longer term shift? Or is this a local concern that will be overcome? And I suppose we could, we also broke that little bit of a local uptrend there. Anyway, I haven't looked at the AMD chart in a while. Okay, I got my note card ready and I'm going to go through the actions I took today. And I'm going to start actually with the ones that I didn't take an action on and I'm still watching. So Celsius, I was saying this is getting close to invalidating where I should get out of my trade, my spot positions from around 53 for this trade. But we are getting into earnings, which could go either way and are risky. But if I'm looking at this on the 4-hour, we have a mean reversion dot. We're getting close to the bottom of the range. I thought, you know what? I've got enough buffer. And this is a very small position. I had a large position in Celsius from January through August. Now this is less than 1% of my portfolio. I'm okay holding this, especially because Celsius has outperformed when we've had other recession concerns in the past. So I'm just taking a wait and see approach. If you have a large position, you might want to reconsider heading into earnings, but at least that's what worked for me. Okay, now GLXY, I actually wanted to get out of at the close, but I didn't get a fill. So I just have an options position on this, and I still want to have a position long-term in GLXY, but I gave myself 2 criteria. I said if we close the day below the 618 fib level, which we did, and if the daily RSI closes below the support line right here, which it barely did, that I would exit my position. Now, I went to sell my calls 5 minutes before the close. I did not get a fill. So I'm going to have to deal with the overnight price action and figure out what to do in the morning. But this RSI support, all assets react differently. But if you look at GLXY, it always, when it maintains an uptrend, bounces from this level on the RSI. And then during bigger corrections, it drops back down below. So that is definitely something to note. I might be a little bit early. But if Coinbase is any indication, if you recall me exiting Coinbase a couple of weeks ago, it looked like I was wrong for a few days, but that ended up playing out. And actually, that's a good transition. Let's go over to Coinbase because I was scouting an entry on Coinbase and I did not execute on that yet. And here you can see the daily RSI breaking down. And the reason I didn't execute on that yet was because of the weakness that we saw in crypto. We broke this previous swing low. We're getting into support right here at the Confluence Model Center Cloud. But this daily RSI, once it enters a downtrend, normally resets, and we don't have a mean reversion dot yet on the daily RSI. So I'm giving this one a little bit more time to see how this one actually shakes out, to see if I can get a better entry. And Coinbase is another one where the earnings call was very positive, but there has been subsequent selling. Okay, UPXI is one that I want to exit, particularly with Solana breaking down. And I've just been looking for a bounce to exit. So this is on my radar to sell because of this breakdown. We have a price target much lower at 175. I would consider getting back in. But because we are oversold on the 4-hour, Solana is seeing a little bit of a bounce right now. I decided to wait and just see if I can get a bounce play and can maybe exit, in the $4.70 to $4.80 range, assuming we can get a little bit of strength coming back into this asset. Okay, CoreWeave is another one I want to get into, but since we broke those previous swing lows, I decided to take a wait and see approach with this, just like I am with Coinbase, to see if I can get in at better prices and to see if this trend is actually going to turn. Because right now, in terms of this lower high, while it looks strong, now we have a lower low, and you have to imagine we have a daily downtrend forming. So where is this going to settle out? I'm not exactly sure, but we do have earnings coming up next week on the 10th, which could be a bit of a catalyst. So another one where I'm taking the wait and see approach. And with the current market environment, rather than trying to catch the falling knife, I would rather wait to see a structural shift in the price action to get back in. Okay, another trade I wanted to take but didn't get a fill on. OKLO has now confirmed this daily head and shoulders. The price target from this would be all the way down at $33. It's already come off a ton from the highs at 193 to closing at 110. I didn't get a fill on the puts I wanted to buy on this. I was looking at the $90 puts, but I am keeping an eye on it to see, okay, can we bounce from support and then get resistance? And could I get a short fill at an area like this? We have earnings coming up as well next week. So a little risky going into earnings, but one to keep your eye on just as a potential short. Okay, Circle is another one where I couldn't get a fill on selling my options today, but I wanted to get out of it because this trend line back test failed. We have broken all the swing lows. I have an IPO position that I'm still holding on to because it's from $31. But the options that I got into here are now slightly underwater. I suppose it's not too bad that I didn't get that fill just because we are definitely oversold on the 4 hour. We can look in the daily. We could probably drop a little bit more on the daily. So unfortunately, while this was looking constructive, it does appear to be breaking down. Now we do have just a little bit of support left in terms of this consolidation zone after the IPO, which would be coming in at, around $100 or so. So not looking strong right now, I think, for Circle really to perform, and I think it will do well in the year ahead. But it's going to need the Clarity Act to pass to start getting some more tailwinds. Okay, and last one that's on the wait and don't take an action right now list, which I know it's kind of boring, but sometimes it isn't about the actions you take. It's about being a bit patient in markets. And that was HIMS, which missed earnings a little bit yesterday, had, initially tagged our price target, bounced up, rejected, and now just saw selling with the rest of the market today. We do have a little bit of a bullish divergence going on the RSI, but this selling just had me pause and say, okay, I'm going to be a little bit cautious just to see where this settles out. And maybe we are going to take one more swing down before recovering. I still think there will be a good trade on this. I'm just waiting a little bit longer for the dust to settle. And now that we're below the 200-day moving average as well, I would just like to see some confirmation of that trend turning. And we're about to get a mean reversion dot on the daily. So yeah, give it some time. Okay, one action I did take, moving right into earnings, which is not my normal play, but I added to my Unity software position. And I don't know what's going on with my trend lines. Every time I relaunch this chart, my trend lines are no longer sharpened up. Must have some kind of gremlins messing with me. But if we look at this, and you know what, let's go to the 4 hour because I want to sharpen it up to the 4 hour. You can see how we back tested that trend line perfectly there. And we are just getting into it again right before earnings. So this is a longer term hold for me. It's now at about 1.5% of my portfolio. I'd love for it to get a little bit larger. I am risking it into earnings, but on the 4 hour, we are clearly, not clearly, we are getting to oversold territory where we're going to print a mean reversion dot. So this could wick down on earnings and then go the other way. But the daily was encouraging me just in terms of the RSI turning around, mean reversion dots having already printed. So I figured since we were into this trend line that we've been testing this whole time during the uptrend, it was worth a try. There is one risk here that I should point out. And this looks like a bit of a bump and run pattern, where you have the lead-in phase, the bump phase, and the run phase. And if this plays out, normally bump and run patterns go all the way back down to the point of congestion, which would be right about here. Incidentally, would also probably align with a back test of our breakout zone. And this is the multi-year breakout, which would be all the way down at $22. So over a 30% haircut. Let's see, where would that get us? 35% haircut. So quite the trim if this bump and run pattern plays out, but let's see what happens on earnings tomorrow. I might regret that decision if that plays out, but with the signals I was getting here on the daily, I thought, you know what, it's worth a swing. And it's not like it's 25% of my portfolio that I'm going in with at this point. Okay, one other one I was looking at was Novo Nordisk, and we have earnings. Actually, did we just report earnings? Nope. They should be reporting tomorrow. So we have earnings coming up, and we are back into the last line of support. So this is either where Novo Nordisk is going to break down or start to recover. And I'm saying it's the last line of support because of all these lows from this consolidation range back in 2021 and 2022. And we're in that area again. We are oversold on the daily. We will probably print a mean reversion dot again. So I'm wondering if it's worth a play. In an account I manage for my parents, I've got some options I got into here, which are pretty much even right now. So it has been beat up, but it does look like it's going to recover at some point. And this would be the zone where it would do it. And if you have a further breakdown, then it would really drop quite quickly, I would say, down to the $38 range. But on the weekly, we have that bullish divergence as well. So one to keep your eyes on. Okay, one other one that I had been wanting to get an entry on was AXON. And on the 4 hour, this trend line isn't totally drawn up, but we had broken above this trend line. And I was thinking of getting in, but then we had some weakness and we were getting into earnings. And I thought, you know what, just wait. And I am glad I did because it dumped on earnings back below our trend line and back below the major support. Massive sell-off, actually. Let's see how much that is percentage-wise. Just in the last 4 hour candle, that was almost 22%. So this one had been a retail darling that I suppose the expectations when they're really high, it's harder to keep up with those. And this one has really rolled over and broken its major uptrend. I thought this would honestly bounce because it's only the third time retest, but glad I avoided that one despite things looking like a recovery. And this, this is saying a lot about the market right now. When you have a sign that looks like you're breaking a daily downtrend and then that fails, that's telling you a lot about the state of the market and the state of expectations. Now, could you go for a bounce play with however sold this is on the 4 hour? I would suggest doing some research and figuring out what exactly was in that earnings report, which I have not had time to do. But I suppose this is a sign to just be careful around earnings because Amazon and Google, those went well. And they were showing strong signs of recovery like this going into earnings. And part of that had me thinking, and, I missed Amazon Google because I said I'm going to wait for earnings to play out and it was a pop. Almost had me going into this today. And I said, no, you know what? Stick to the rules. This is a smaller name too. And this had the opposite reaction. So earnings, you just can't control that. And I'm glad I stuck to the rules today, despite, missing adding to my Google position and getting in on an Amazon position last week. All right, let's go back to the watch list because one sector that's been really beat up, but I think is going to come back soon is the metals. And just looking at CLF, this has had a clear breakdown, but we're getting into a support zone here at $9.80 that I think is going to be worth watching on CLF. Let's just see how it's doing in after hours. It's roughly at the same level. And then, RIO has been doing well, but has been selling off too. RIO is right now back testing. Let me go to the daily because it's easier to see. But there's a good entry potentially on RIO where you had this months-long downtrend. Actually, I'm sorry, years-long downtrend. and we're just back testing it perfectly for support. So actually, I'm going to write that one down for tomorrow because that could be a good one to look at. And then which was the other one I wanted to look at? AQMS has been really beat up, but it's starting to find a base. I would say with this massive sell-off, this one is still a little bit risky. BHP and Vail has been really strong. It's retesting right now its major overhead resistance that, I mean, this has been resistance back since 2021. Sorry for the watch list view. It's I know, a little bit crowded on the screen. I imagine we'll probably see a little bit of resistance there. But in terms of strength coming back into the metals, it might take some time, but there are some murmurings of trouble with the US and China trade deal. And I could see China using rare earths again as a leverage play. If we look to REMX, for instance, this is right into where you would expect first support to come in terms of, I mean, it definitely got into resistance, but these previous swing highs right here, this would be an area where you would expect support. If this fails, then we're really dropping down, in this area of support on REMX is at 63. Then we're most likely dropping down, I would say, to the $55 range if this fails. But if you're looking to get into rare earths, there might be an opportunity coming up. It seems like REMX is most likely, just judging where mean reversion in the RSI is, most likely going to sell off a little bit more. But I was also hoping for that in July and didn't necessarily get that. And then USAR, no, sorry, that's URA. That's the uranium, USAR. Here we are. This one is starting to look like it's getting to a decent zone. Not quite yet. I would give it a little bit more time because we broke this little minor uptrend, but the major uptrending support is going to be coming in at around $14.50, which corresponds with a lot of these previous tops and the middle of this consolidation range. So I think this one is definitely worth a look. We're almost oversold on the daily. Needs a little bit more time. We are getting into earnings, so that's one thing to watch out for, but you're oversold on the 4 hour. And earnings on Thursday, could that be the catalyst for USAR? REMX, again, in contrast, looks like it has a little bit more selling to do. So anyway, something to watch out for. Okay, one other one to watch out for going into earnings is XYZ or Block, which sold off with the rest of the market today. We can ignore this diagonal line, but we are right into underside range support, moving into earnings on Thursday. It's risky buying into earnings, but it seems like this range has been respected. Now, if we see some strength come back into markets tomorrow ahead of that Thursday earnings, might be worth a little bit of a swing, you know, if you want to have some fun, but I would say don't buy right into earnings, but I'm expecting this one to most likely move a little bit. All right, and last sector to watch, I haven't been taking any trades here, but the Bitcoin miners have been holding up surprisingly well through all this, and some like Iron or Iris Energy have actually been doing really well, and Cypher also. But CleanSpark, we are just into support here at about $15.70, which was our breakout zone. And the charts, not on the daily, but at least on the 4 hour, look to be getting to oversold territory. Now we are in the lower band here, so definitely watch out. But if the 50% support can hold, that would be a good sign. But broadly speaking, we are still, at least on CleanSpark, in a daily downtrend. So we haven't made higher highs. We've just been making lower lows the whole way. So I would say watch for the recovery with the current market environment. Marathon is breaking down as well. But if we then contrast that, and let's just pull them up manually. If you go to Iron, that has earnings coming up, but this one you can see structurally has been holding up much better. So not all names are created equal. We do have earnings coming up on Iron on Thursday as well. And then Cypher. All right. Cypher just had earnings and they had a pretty blowout earnings report. And they are holding up fairly well also. And then Wolf, I haven't looked at in a while, but I glanced at the chart today and Wolf has been really strong as well, just in terms of how it's holding up. I mean, you can clearly see this chart compared to CleanSpark or Mara, even though I would say on the fundamental front, they're better. This has been holding up really well. Earnings coming up on Monday. So it's interesting and encouraging to see, these Bitcoin miners now have a new line of business with HPC compute and are holding up okay despite crypto not doing quite as well. Okay, so that's it for the day. A lot of things that were on my radar, not that many actions taken at the end of the day. I'm hoping for a bounce to be able to get out of some of those weaker names. I would say right now, there is most likely going to be a great opportunity, or there are going to be great opportunities on a lot of names, but I have a feeling we're not going to really settle out until at least next week. And if we can get some kind of news on the US government shutdown ending, that would really help to settle markets. I'm cautiously optimistic, but I don't think now is the time to take on outsized risk or rush into positions. I think at times like this, it just helps to slow down and wait for the recovery. If there are any names that you want to buy, you'll get in at slightly higher prices, but you'll have much more certainty and a higher chance of success on that trade. So I'll report back tomorrow with what transpired on the Wednesday trading day. And for the time being, let's hope that markets can get their footing and that buyers can start to step back in. All right, have a good night, everybody. Bye for now.